Good evening, everyone. Thank you very much for tuning into today's webinar. My name is Jyotak Nandwana, and I'll be hosting the webinar on the topic top stocks that are moving sideways. So in our previous webinar, we had talked about all those stocks that were showing leadership qualities. And this is a period when a lot of stocks have undergone some correction, and many of them are actually now moving sideways, with both key indices being very choppy in recent times and not making much progress. So before we begin the webinar, I would request you to go through our disclaimer once. So it says stocks that we'll be discussing in today's webinar, please do not consider them as a recommendation to buy or sell. All information is for educational purposes only and in no way should be considered as investment advice. All right, so this is going to be our agenda for today. As usual, we'll be discussing about the current market condition. Then we'll move on to our main topic, which is top stocks that are moving sideways. So I'll be also taking you through as to how to use the MarketSmith India product in finding those top stocks. We'll also discuss a couple of names that are actually setting up well. And towards the end of the webinar, we'll have a dedicated Q&A session in which I'll take care of all your queries. So if in case you have any query, please reserve it for this period. However, if a query is very relevant to the slide of discussion, you can send in your query using the chat box. Okay, so this is the daily chart of the leading index, that is Nifty. So as we all know, market has been under pressure for quite some time. So it's been more than a month since both Sensex and Nifty moved into under pressure. So May 18th was the actual date. Now when we talk about institutional selling, so we keep a track of whether institutions are increasing their exposure or reducing their exposure, and distribution count is a very good method of keeping a track of institutional selling. So the distribution count is neither too high nor too low, it's somewhere in between. So 3 on Nifty and 4 on Sensex. 4 on Sensex is of course a bit higher, but then again what we have seen is both these indices are actually getting good support around the 50-day moving average. So they're not very far off from the 50-day line, around 1% above the 50-day line, but that has been a very good support for the market. Now, when we talk about Nifty, it is around 0.8% above its 50-day line. So you can see how in the last few sessions, I'll quickly annotate, you can see how in the last few sessions it has been moving well in line with its 50-day moving average, right? So it's somewhere it's getting support over there, but on the upside also you can see that there is a bit of resistance around its previous high, which was around 10,929. So Nifty is finding extremely difficult to take out that high, and that's the reason why we have seen the market is being range bound in the levels of 10,600 to 10,900. Now this is an extremely tough period, especially if you're looking for a clear trend to emerge. So there is basically no trend over here, and that makes it a little difficult to trade in sync with the market. Now, when it comes to institutional selling, we have seen a lot of foreign institutions actually reducing their exposure, not only in India, but also in emerging markets. So with US bond yields going up and looking attractive for foreign investors, they're actually reducing their exposure to emerging markets. Of course, emerging market currencies have also taken a hit, and that makes earning portfolio returns also a little difficult for them. Now, coming back to India, the foreign institutional selling has been high. So in the last 2 months, that is April and May itself, FIIs have withdrawn close to 22,000 crore, and in June itself, they have withdrawn around 9,000 crore. So they have been continuously selling in June. Till now, I think we have had just 3 sessions where FIIs have emerged as net buyers, and in all the rest sessions, they have been actually net sellers. Now, there are select pockets that are actually doing well. So one thing that we all need to keep in mind is that even though the market is looking weak, but both Nifty and Sensex are actually not very far from their all-time highs. So for Nifty, the overhead supply is 3.6%, so it's around 3.6% down from its all-time high. And what is keeping the market stable in those tough periods is the fact that there are select pockets like private financials, so private banking stocks are actually doing well, and that has supported the market in recent times. And we continue to see a lot of quality stocks hitting new highs, so the likes of Bajaj Finance, Britannia Industries, Nestle India. These are the ones that are moving around their all-time highs and continue to hit new highs. So we see Page Industries is another example where a quality stock is witnessing good price action in current difficult times. Right. So next up is, so that was about key indices, and next we have is the Nifty mid cap. So this is where actual weakness has been spotted in the market. So as you can see from the chart, there is no clear trend. You can see that the market is up one day, it's down the other day. The index is up one day, it's down the other day. So there's no clear trend, and that makes it even difficult for stocks to move higher. Now, what we do see is there is a strong support around the 18,000 levels, and the index is still around 2.5% above that level. But the negative is that it is trading below its 50 and 200-day line. So that makes it extremely difficult for it to move higher, because there is a high overhead supply of around 15.5%. So it is down, it has corrected 16% from its all-time high. Now, in the past 2 weeks, actually what we have seen is the number of stock breakouts. So we also keep a track on how many stocks are breaking out from their base patterns. So the number of stock breakouts on weekly basis has actually increased in last 2 weeks. So that is a good trend which is emerging. But then we also want to see a follow-through day happening. So right now the Nifty mid cap is in rally attempt. We want to see a follow-through day happening. So that will be a strong up day. So we are looking at a gain of at least 1.5% to 2%. So that if that day comes in with volumes are higher than previous session, so that will mark a beginning of a new uptrend. Of course, follow-through days can fail, and they have failed in the past, but no uptrend has begun without giving a follow-through day. So we'll keep an eye on that as well. For now, it remains in a rally attempt. Next we have is Nifty small cap. Now, this is where weakness has been in fact more. So selling pressure has been more intense in this index, and of course there are valuation concerns. So a lot of small cap stocks had actually ran up well ahead of their fundamentals, and those were at really high valuations, and that's the reason why this particular index and stocks from this space have seen a lot of correction in the past 3 to 4 months. Now, small cap index has a strong support around levels of 7,200, and it is still around 1.5% above that right now. The index is just like mid cap index is trading below its 50 and 200-day moving average. Overhead supply over here is much higher, so it's around 24% down from its all-time high. So that's Nifty small cap for you. Again, looking weak right now, but we would wait for a follow-through day over here before shifting it to a confirmed uptrend. But right now, it is very close to its previous low. So we might see the index even going below that and reaching its previous low, and that might move the index into a downtrend. So for now, we are a bit cautious on it. Okay, just want to check if all of you are able to hear my voice clearly. Great. I'll just type in a message. Few of them are facing issues, so I would request you to re-log in. All right. So moving on, Here's the number of stock breakouts. So as you can see, there was a week where we had just 3 stocks breaking out. So June 8th, so week ended on June 8th was that week. And now we have seen a couple of weeks where we are beginning to see multiple stock breakouts on weekly basis. But one thing to note over here is that, give me a second, I'll just type in a message again. All right, sorry for that. Yeah, so one thing to note over here is the fact that even after breaking out a stock, most of the stocks are actually facing difficulty in moving higher. So there's not a lot of demand that comes in and allows the stock to move higher. So that is a concern. And of course, we need institutional participation for that. Right now, the domestic institutional investors, the domestic inflows that have been coming in through mutual funds are actually providing a lot of support to the market. But if we want the stocks to move higher, the market to go higher, we also need a good amount of support from foreign institutional investors. So that is something which we have not seen. And that's the reason why even after breaking out, even a quality stock might find it difficult to move higher. Some are, of course, exceptions. So we had Page Industries, which had broken out recently, and that one stock is doing pretty well right now. All right, so let's move on to the main topic, which is finding top stocks. Now, as if you had attended our previous webinar, we had discussed about leading stocks and how to find leading stocks and what are the characteristics of leading stocks. But so in that, the main criteria that we had talked about was relative strength, price strength, that is, and relative strength line. Right. So now when we talk about top stocks, we need to look at it from an overall perspective. So it has to be top in terms of both fundamentals and technicals. Now, in terms of fundamentals, we are basically looking at both earnings and sales growing at a fast pace. And when that happens, you'll obviously see a lot of interest being generated in a particular stock. So this is a very good line that I came across. So when the C, A, and N in canceling, so C stands for current earnings, A for annual earnings, N for something new. So when all these 3 factors in the canceling system, that is big earnings, growth, and a hot new product, they come together, it is like a magnet, and it attracts the attention of institutional investors. Now, when institutional investors jump in, that will trigger the supply and demand, which is the S in canceling. So there will be a lot of demand being seen for a particular stock. And with that demand, a stock will move higher, which will make it both an industry and market leader that will earn it the L in the canceling system. But then more importantly, you also need to have the M, which is market direction, in your favor. And until and unless that is in your favor, even if you have your stock selection in the right place, a stock will always find it to move higher in a weak market, because 3 out of 4 stocks follow the general market. So when we talk about finding top stocks, we need to consider earning strength, price strength, strong demand, top industry group. Now these are the 4 pillars, and all these 4 pillars are actually being taken care of in the MarketSmith India product. So all proprietary ratings that cover these 4 qualities can be seen for each Indian stock, and that will help you to narrow down your search of top stocks. So we'll do that exercise once we move on from this slide. So the next one we have is how to use MarketSmith India to find top stocks. So these are the ones that I actually found while screening for stocks today morning. So I'll just take you through the exercise and share the screen of MarketSmith India so that you're also aware as to how to filter out stocks. All right, so all you need to do is go to idea lists and filter stocks. Now over here, what I have done is that I'm only looking at stocks which have top earning strength. So basically earning strength of good and great. So that will take care of the fundamental factors because it looks at sales and earnings growth as well as return on equity. And next up we have is buyer demand. So right now what will happen is, even if the relative price strength rating has dropped because there has been a huge correction in small cap and mid cap stocks, I want a stock to have a good buyer demand. So even if it is going down, like it is acting weak in with respect to the overall market, the volume shouldn't be too high, right? So there is not a lot of distribution that's happening in the stock. So for that, I have kept buyer demand at A, B, and C. So C is basically neutral. A and B is good and great. Now next up is, also I want to make sure that I am not looking at low volume stocks. So I'm putting the average rupee volume criteria over here. Now in the slide which I had shown you before, so I'll again move to that slide. Yeah, just a second. All right. So these are top stocks that have corrected less than 10% and are moving sideways. So when I say sideways, they are actually building a base pattern. And the other condition is they have not corrected more than 10%. So they have corrected less than 10% only. And that's a very good factor to put in, because when you see mid cap and small cap index down 15% and 25% respectively, and these stocks have not corrected more than 10%, so that itself is showing a sign of leadership, right? So let's go back to MarketSmith India product. Yeah, so that's the reason why I'm keeping the off high filter at -10 to -5.1 and greater than equal to -5. So this will only show up stocks that have not corrected more than 10% from their 52-week high. And next is next condition was that they are moving sideways, so they're building some kind of base pattern. And for that, what I'll do is I'll keep this filter over here, which is pre-breakout. So pre-breakout means the stock hasn't broken out yet and it is building a base pattern. So percent to pivot, I have kept that. All right, so I'm getting okay. So the reason why I'm getting just one stock is because I had applied the filter in current holdings. What you need to do is go to filter India stocks and apply the same filter again. Right. So I'm sorry for that. I'll quickly do it for you right now. That's it. Right. So we are not getting a lot of names. We are just getting 8 stocks, and I had actually also looked at the fact that whether those stocks are being owned by institutions or not. Now, so that's how you filter stocks. So these are some of the top stocks which are actually consolidating. So they are building a base pattern. They have not corrected more than 10%. So that makes it the fact that most of these stocks are actually trading above their 50-day and 200-day moving average. So that's very important, because when you have a small cap and a mid cap index trading below 50-day and 200-day, and these stocks are actually moving, trading above that, so that's itself a very big positive for them. So that shows that there's not a lot of supply. Also, even if they have corrected, let's say 8-10% from their 52-week high, one criteria that we had put in was the fact that they have an accumulation distribution rating of A, B, and C. So basically, they, even though they have gone down, the volumes that have come in are not huge. So that indicates that it's not the institutions who are actually reducing their exposure. It certainly gives us an idea that it's basically the weak hands that are moving out of the stock. All right, so going back to the slide. Now, so these are the ones that I actually shortlisted. So it's RBL Bank, HDFC, Minda Industries, Garware Ropes, AU Small Finance Bank, Cholamandalam Investment. So from the little knowledge that I have, all of these are fundamentally very strong scripts, and in terms of technicals also, they are doing a lot of things well, because they have not corrected much. But again, to repeat the disclaimer that I had shown you earlier. So please do not consider this as an investment advice. This is only for educational purpose. Right. Now out of these ones, we have RBL Bank in our model portfolio. And apart from that also, so for RBL Bank, we had actually taken an aggressive entry because the stock was kind of seeing a lot of resistance around around levels of 552. So I'll show the chart as well so that you get a clear idea. Right. So when we go to RBL Bank, you can see in the daily chart, you'll be able to see how the stock was finding on multiple occasions. It had actually found resistance. So you can see how on 4 occasions at least, on 5 at least, that the stock failed to clear the 552 levels. And when it cleared those levels, we had actually added the stock in our portfolio. Right. So in case if you're finding the screen not very clear or it's looking hazy to you, I would request you to check your internet connectivity, because most of our users who have joined in are not finding any trouble with the screen. Right. So that was RBL. Of course, from technical perspective, you have seen that how the stock, once it cleared the levels of 552, it has been doing well. And apart from that, also on fundamental side as well, the company has set some really good targets under its Vision 2020 plan, where it is targeting some really strong loan growth and of course bringing down its cost to income ratio as well. And it's moving in line to those targets, and that is something which caught our attention also. So management seems to be really determined to achieve those targets, and that's one positive. Apart from that, also the credit card business is doing really well for the bank, and it has seen some really good growth in terms of credit card fees and the number of credit cards that it has issued. Now, besides, of course, the other names are also good, but one name that caught my eye was Garware Ropes. So it's not a very big company. Right. So it's not a very big company, and in terms of market cap as well, so it comes in small cap, mid cap criteria. And this is one stock which has not corrected much. In fact, it has been moving sideways for a lot of time. And I thought I'll just quickly pull up some points as to what the company is doing well in terms of fundamentals, and also we'll pull up the chart and look at it how it's moving in terms of its price volume action. So Garware Ropes, if you have not heard about it, it's in a very niche kind of a segment. So it's India's leading company in area of technical textiles and world's largest producer of polymer cordages. So basically, it's into making ropes, and these range from high performance polymer ropes, fishing nets, sports nets, safety nets, aquaculture cages, coated fabrics, agricultural netting, and geosynthetics. Now, as it's a very niche segment and there are not many companies which are focused in making those products, Garware Ropes is one which is actually doing very well in terms of both sales and earnings growth. So prior to few quarters, it was actually having single-digit sales growth, but now in last quarter, it actually reported double-digit sales growth, and the sales growth has been actually accelerating in the last 3 quarters. So we have seen an acceleration in sales growth and also in earnings growth. So clearly, there is a trend of margins expanding, which is boosting, in fact providing acceleration in earnings growth as well. Now, apart from that, what is actually driving the sales growth is exports. So exports are doing really well. So one thing about this company is the fact that they invest a lot of their resources into creating new products. So a lot of research and development happens, and they are continuously improving their product portfolio. And that is something which is actually driving its growth now. So last 2-3 years, they have been doing that. And now exports are picking up. And of course, with rupee depreciation also, that is also something which is benefiting the company. Now, one interesting fact was that the company is actually passing on rising raw material costs. So crude oil is actually a very important raw material for the company. and we have seen rising oil prices, and despite of that the company has been able to pass on the rising raw material costs, and that displays pricing power, and that is something which is a common quality between all good companies. They are able, whenever they find pressure in terms of rising raw material costs, they're able to pass it on uh, to the end consumer. Now, when I was screening for those stocks, I was actually looking at those which are currently trading in a base pattern. But Garware Ropes, by the end of today's session, actually broke out of a 7-stage base pattern. So, in terms of base stage, it might look quite extended because it is breaking out of a 7-stage. So I'll just pull up the chart and I'll quickly show how the 7-stage base pattern is actually uh, not a very late stage base, and I'll provide justification for that as well. So here's Garware Ropes. Now you can see how I'll pull up the weekly chart. You can see how the stock had a very good run from the breakout of this cup base pattern. So this was around July 2016, and then it took a pause around July 2017. So for one whole year, it was in a good strong uptrend. Now that pause has actually been for almost a year now. So from July 2017 to we are again going to coming into July right now. So almost for 1 year, the stock hasn't done much. So from 1,000 levels, it has been trading around those levels only. The breakout was not a convincing one over here because it again built a base pattern. So we have two back-to-back long base patterns over here. So it has gone through a long consolidation in my opinion, and that's the reason why I am not too bothered about the fact that it is breaking out from a 7-stage base pattern. Doesn't look too extended to me. However, one thing that we need to keep in mind is that today's volume was not great, right? So it is below average, so it wasn't too high. And apart from that also, if I have to look at from a perspective of how it is doing in terms of accumulation and distribution, so that is the buyer demand, so it's not that great also, it's kind of fair, but we would like to see the interest in this stock picking up in the next few sessions, and that will also help buyer demand increasing. Overall, looks a great stock in terms of fundamentals, no doubt about it, but we would like to see higher volumes coming in. And one thing which everyone needs to keep in mind is the fact that it's a very small company, so not a lot of volume in over here. Of course, from market cap perspective, it's a small cap, so that means that the index is actually not in favor of getting into it right now, because the index is struggling in a rally attempt right now. But even then, we see some good characteristics in this stock because it has shown leadership. It has broken out in a weak market. Now, the next thing that we need to watch out for is that there is demand being generated in the stock. So people are kind of, investors are lining up to buy this stock, and that will get reflected in volumes as well. So that is something which we are also waiting for. So this is one stock, both in terms of business model as well as in terms of technicals, which caught my attention, and that's the reason why I thought it is worth mentioning in today's webinar. All right. So the next criteria that I used to find top stocks. So of course, 10% is something which is quite difficult right now in the current market environment. So I thought that let's relax it and increase the criteria to 10 to 20%. So stocks should that have corrected 10 to 20% and are moving sideways. So this is the list of stocks. Of course, you can again use MarketSmith India to find all those stocks uh, which have corrected in the range of 10-20%. So you need to change the off-high filter to 10-20%, and also the pre-breakout criteria that you need to put. Of course, these are the ones which are ahead in terms of earnings. So earning strength is something which I have looked at, and apart from that, accumulation distribution. So buyer demand rating also I have kept it at A, B, and C. So these are some of the names that have come up. Some really good companies in terms of fundamentals, but the one which I looked at is Jumna Auto Industries. Now, The reason for that is because it is a leader in its market. So it's India's largest manufacturer of suspension products for commercial vehicles. And over the last 3 years, what we have seen is the company has actually strengthened its grip in the domestic OEM market with consistent market share gains. So it stands around 73. It stood around 73% in Q3, and when we compare it to previous prior periods, you can see how it has been continuously gaining market share. So 57% in 2014 and 67% in 2016, and currently around 73%. Now, in terms of sales growth, we have seen accelerated sales growth in last 3 quarters. So that is something which is really good in terms of top line growth. And then in terms of bottom line growth also, we have seen strong double digits. So 30-40% growth in net profit, and margins have also improved in the recent quarter. Now, this company is actually in a very good position, in a dominant position, because it controls 3/4 of the organized market. So it's in a dominant position to benefit from an uptick, which it has already benefited from. But commercial vehicle sales are still in a very good uptrend. And that's mainly because due to an increase in infrastructure investment, resumption of mining activities, strong demand in rural India, increasing fleets of logistics. So that is a key growth driver, especially in post-GST era. Now, when it comes to technicals, the stock has been moving sideways in a consolidation-based pattern. So let's move on to its chart, and that will give you a fair idea as to how the stock is doing right now. So in terms of rankings, you'll see the earnings strength stands at 93, price strength at 90, buyer demand at A+. So these are something which are really good. So for a stock that has fallen almost 17-18%, so you can check the overhead supply over here, how much it has come down from its 52-week high. So percent of I is 18%. So for a stock that has fallen 18%, it still has a buyer demand of A+. So that is pretty crucial, because we look at almost a quarter of data. So of course, these were the periods when the stock was strongly accumulated. And now when it is going down, you can see how the volumes have actually dried up. So it's not going down on above average volume. Now let's look at its weekly chart. Over here, you will be able to see how the stock is consolidating it is moving sideways in a consolidation based pattern. So it's been moving sideways for 8 weeks. Volumes have dried up. So from technical perspective, of course, you might see the stock has had a very good run from for a long period of time. So it could be in for a long consolidation. So that is something which cannot be ruled out. But this is, of course, a stock which needs to be there in your watch list, and you need to keep a close eye on it, because it is showing a lot of positives in terms of technicals. And when it comes to fundamentals, we all know that it's a market leader, consistently gaining market share, a very good direct beneficiary of growth in commercial vehicles. Of course, that is something which is highly cyclical in nature, and whenever there is going to be a slowdown in the commercial vehicle industry, this is going to be directly affected. But for now, it looks pretty good. So this is one stock which needs to be there in your watch list. And the ones which were actually mentioned in the previous slide, so you can also keep an eye on all those stocks. So these are the ones which have not corrected more than 10%. RBL Bank, HDFC, Minda Industries, Garware Ropes is one which we have discussed, AU Small Finance Bank, and Cholamandalam Investment. And the ones which have corrected more than 10%, but not more than 20%. So in the range of 10 to 20%, and are currently building base pattern. So SKF, IG Motors is one. So it has had a huge run and a dream run in the last 5-6 years, but this stock is right now building a first stage base pattern. So that is something which needs to be in your watch list. Future Lifestyle Fashions, Escorts is another stock that is looking pretty strong, even though it is moving sideways. Tata Sponge Iron, Piramal Enterprises, and Jumna Auto Industries lastly, which we discussed. Now, to put this into practice, of course, you can make good use of MarketSmith India's Filter India Stocks feature. So that will allow you to quickly shortlist all those stocks which are kind of looking very good even in a weak market scenario. So keep an eye on stocks with high earning strength and buyer demand. So this is a period when you might also have stocks. So in our last webinar, we had discussed about leading stocks in terms of both earnings and price trend. But since the market has corrected, the small cap, mid caps have corrected a lot. There are a few stocks where the relative strength, the price strength rating might have dropped a lot, and they are right now building base patterns. So they might build a base pattern for say 2 3 months. Of course, one question that might come to your mind is why not buy the stocks right away? The only, especially for the ones like Jamna Auto Industries, which we discussed right now, the only reason why I wouldn't suggest to get into that stock right now is because it has had a huge run and it's building a base pattern for the last 8 weeks. So it has been consolidating, moving sideways. Now we don't know how long that's going to happen. So it could be for a period of 15 20 weeks also, or it could be for 1 year also. So the thing is that we don't want to get stuck into such stocks and basically make our investment dead, right? So all you need to do is also prefer stocks which are trading about 50-day and 200-day moving average. The reason for that is when a stock keeps moving or keeps trading about 50-day and 200-day moving average, the chances of the stock consolidating or moving sideways for a long time are less, right? So stocks that have not breached their 50-day moving average are in current market, be it from small cap, mid cap, or even large cap, are actually showcasing strength and are actually not witnessing a lot of distribution or a lot of supply, right? So these are the main takeaways: stocks that have high earning strength and buyer demand, and stocks that are trading above their 50-day and 200-day moving averages. So with that, we come to the close of the webinar. Now we'll have a dedicated Q&A session. So you can send in your queries. I'm sure you'll have a lot of queries with respect to stocks and the general market. All right. So the first one is Bajaj Holdings a good buy? So let's discuss all those stocks using MarketSmith India. So Bajaj Holdings had actually broken out recently. And one thing that I can see over here is that the stock has all the characteristics in its favor. Now, we had also discussed about this stock, but from a model portfolio perspective, but we already own Bajaj Finance in our portfolio, which is actually doing quite well for us. And this is a holding company which has interest in Bajaj Auto as well, Bajaj Finance, and Bajaj Finserv, and if I'm not wrong, in Maharashtra Scooters as well. Now, from technical perspective, of course, this stock has broken out, is holding up well, and even if I see how far it has gone from its 50-day and 200-day moving, not very far, so it doesn't look too extended also. 3 down sessions have actually come on below average volume, so looks decent to me. If you had not invested in Bajaj Finance, maybe you can get an exposure into that stock via Bajaj Holdings investment. But the only thing that we have noticed in the past as well is holding companies obviously trade at a discount to their investments in the main companies, and this might trade at a discount to that. So the theory that it will catch up and it will move in line with the valuations of all the subsidiaries might not turn out to be true, and it might continue to trade at a discount. Having said that, from technical perspective, the stock looks decent to me right now, and also it belongs to, it's quite large cap in nature, so looks decent from that, from market cap perspective also. So yeah, overall it looks decent to me, but you need to do your own research, and please do not consider this as a buy recommendation. Okay, so a lot of queries have come in now. Right, so next is ICICI Prudential. Right. So this is actually trading around, it's building a base pattern and it's trading around the base low. So one thing which you can notice over here, maybe you might want to use it as a trade opportunity, but this is not an ideal buy point. One thing that you can notice over here is that it has bounced from its previous base low, so that is 707 a couple of times. So over here you can see today's session was that, but the volumes are not there and it might not be very convincing also, and it's from canceling perspective also, it's not the right uh, way to get into a stock, but it again depends on your investment style. But from canceling perspective, you might want to wait before the stock breaks out and gives an ideal buy point. Okay, next stock is Tata Motors. Okay, so this stock had actually hit a 52-week low today and certainly looks very weak to me because it has breached its previous low also. So this keeps happening in a stock which is in a downtrend. Now you might see over here now, many would have got into the stocks thinking that, you know, it has bounced back from this, but then you might also want to quickly take your profits because it is in a downtrend and it has been making higher lows and I'm sorry, lower lows and lower highs. So that is something which defines a stock in a downtrend. Volumes were also too high. So company is also struggling when it comes to its overall business model. Also, it has seen a slowdown in growth in its most profitable business segment, which is Jaguar and Land Rover. So it is right now struggling over there. So I wouldn't suggest getting into the stock right now. If in case you're holding it, today's action was quite weak. It might bounce back, of course, but overall it's looking in a downtrend right now. So I would, in fact, suggest you to wait for the stock to make a new base pattern because this is something which keeps coming to us in queries as well. So you might see over here how the stock was in a downtrend and then it made a new base pattern, and once it broke out of that, you know, it did well, so it didn't do that badly. So it might repeat that pattern again, but overall it is struggling in terms of fundamentals, so it will not be in my watch list right now. All right, so next query is from Saroja regarding Mahindra CIE. So we had added this stock recently, and one thing that we looked at the stock from technical perspective was the fact that it has been moving sideways for a huge period. So it kind of gave a multi-year breakout, and that kind of a breakout we had actually seen doing really well with stocks like Nestle India. So Nestle India, after giving a multi-year breakout, has actually advanced 20-25% and has done really well. Now with Mahindra CIE also, if you look at it, it has really good ratings in terms of both earnings, price, and of course buyer demand as well. Now the only thing over here is that by the time it broke out of its base pattern, in hindsight, it might look a bit extended because it was already up 14% from its 50-day line. So maybe one could have waited for it to come down, but these are situations where it becomes really difficult to take a call because you need to take your decision whether you need to buy or not. And when we looked at it from both fundamental and technical perspective, it was looking quite good, especially the fundamentals, because the company has been reporting some really good numbers in recent quarters, and it is seeing growth in both its Europe as well as India business. Of course, in India, it is benefiting from the recovery from the strong demand in commercial vehicle industry. So, and also in its when it comes to its business model, it is quite different from tier two suppliers because it is not just making automotive components. It is focusing only on those components which are actually highly complex in nature. Those are value added products, and not many companies are actually making those. So that's the reason why we thought that maybe we'll give it a chance. But once again, you can also look at the fact that the relative strength line was actually at 52-week high. So overall, it was looking quite good, but then we need to also understand the fact that uh, once it broke out, there was not a lot of demand for the stock, and that's the reason why it has been going down. And we purely came out of it mainly because it hit our stop loss. The stock might bounce back from here, but then this is the period when one needs to understand is that capital preservation is really important, and that's the reason why we thought that it's better to get out of the stock now. Right. So a lot of queries have come in, and it's quite possible that I might miss as well. But I'll try my best to answer as many queries as possible. Okay. So next up is Dilip Buildcon. So since a lot of stock queries have come in, I might not be able to talk more on the fundamental front. I'll just quickly give my opinion on the basis of technical. So uh, Dilip Bilcon is a stock which actually saw a huge price appreciation last year. So it was one of the best performing stocks last year. And when you see those kind of returns, so from levels of 180, from lows of 180, it almost went up to 1200 if I'm not wrong. Yeah, so it went up to 1200. So that's a huge return. And when such returns come in, obviously you will see, and with the market also, weakening, you might see a lot of investors actually booking profit, and the stock might move sideways. So it has breached its 50-day line, 200-day line, and throughout this uptrend, if you notice, it never breached its 200-day line. The black line is the 40-week moving average. On daily chart, it's the 200-day line. So throughout its uptrend, it never breached that line, and now it has breached. So it might be in for some consolidation. Again, it is impossible to predict if that consolidation, if that sideways movement is going to be for 10 weeks, 20 weeks, 30 weeks, or a year as well. So that is something which is really hard to comment on. But from technical perspective, this stock wouldn't be on my watch list right now. And if it was in my portfolio, I would have been happy to book my profits and get out of it at a 50-day line breach or even the 200-day line breach. Okay, so next stock is Questcorp. Right, so this is one another stock which has actually given a failed breakout. So this was a time when it actually bounced from its 50-day line and did well for some time, and then it's been going down for almost last 10-12 sessions. Of course, volumes are on couple of occasions volumes were above average, but then overall it's not going down on high volumes. And when I look at the accumulation distribution rating, it's decent at B plus. But then again, one thing that you need to keep in mind is that the stock has breached its 50-day line, and when that happens, when a quality stock does not find support at its 50-day line, that is actually a pretty negative signal, because then the chances of the stock consolidating and making a fresh base pattern are high. Now, when a stock makes a base pattern, if you look at historically as well, the stock has made base patterns of say 23%. So you can see the base depth over here. So it's 23% over here, 18% over here, 15 and 13, and over here it's 22. So around levels of 20-25%, that's the amount of correction the stock has seen in the past. But once again, we shouldn't get into the prediction business. What we are trying to do is trying to interpret the stock's price action, and a really good performer through in last year, and it could be in for some consolidation. So I wouldn't be in Questcorp right now. All right, so next up is Emphasis. So I have got a couple of queries, Edelweiss and Emphasis. Yeah, I'll come to Edelweiss next. Let's talk about Emphasis first. All right. So emphasis is certainly looking one of those stocks which actually is currently consolidating and has a good buyer demand as well. I think one of the reasons why this didn't come up in the list that I shared earlier was because of earning strength. So it's not bad, it's at 74, but then we were only looking at stocks which have EPS strength of at least 80. Right. So doesn't look too bad to me. It's actually moving sideways, and even if you look at its relative strength line, it's showing leadership quality, and it has a good RS price strength of 94, moving along well along its 50-day line. So that's also one positive. So even when it's building a base pattern over here, the good thing over here is it has not breached its 50-day line. So that is something which you need to keep an eye on. It is still 3% above that level, but if it breaches that, then the consolidation could be longer than expected, right? And again, it has had a really good run, so could be extended when it comes to both in terms of technicals as well as in terms of fundamentals. So you might want to wait till the stock breaks out and moves into new high ground, because that will give us a confirmation. For now, this is one stock which I would certainly keep in my watch list. Next up is Edelweiss. So this is part of our model portfolio. Of course, a really good company in terms of fundamentals, and this had shown leadership characteristics when it broke out in a sideways market, in fact, a weak market, and it had done relatively well also. Now, if you look at it, the relative strength line had actually moved on to a new high, but over the last few sessions, the stock has come under some selling pressure, and it even breached its 50-day line. So that's one negative we have seen in this counter. But what we are also looking at is the previous low. So that is around 292 levels, and today's low was around 294. Now, all we can hope for is that the stock finds support around those levels and is able to retake its 50-day line and rebound from there. But if that doesn't happen, don't hesitate to move out of the stock, because overall the mid cap and small cap space are still not showing signs of bottoming out, and they are still in a rally attempt. Right. So I'll just check if there is any other query left. AstraZeneca is one stock which I had missed. Right. So if you're holding the stock, I would suggest you to keep holding it, because it has done relatively well after breaking out. The relative strength line is at a year's high, and one thing which you notice over here is that the stock has actually hit after breaking out. It has advanced 20% or more in less than 3 weeks, and that's the reason why there is a flag over here. Now, if you're a conservative investor, you might consider booking profits also, because keeping in mind how the overall market is behaving. But if you want to ride on the profits, because we have seen in last couple of weeks strength returning in pharma stocks, and pharma stocks actually doing well. So this is one of the stocks that have seen huge accumulation over here, huge volumes here. So for now, you might want to keep holding it. I wouldn't suggest getting into the stock right now, because in terms of fresh position, because it has it is bit extended from its ideal buy point. Vakrangi, I wouldn't suggest getting into that stock right now. It has been in a clear downtrend. Company has been struggling due to some corporate governance issues, and there has been a lot of talk about it. So that is one stock which is avoid for now. Okay, couple of queries have come in with respect to Welspun Enterprises and HCL Technologies. Right, so this was one stock which had broken out recently, And if you look at it, its base formation also. So from the base low of 140, that is over here, it continuously kept going up, right? So there was just one down session over here. Apart from that, it kept on going up. And this is the kind of base pattern which William O'Neill suggests to avoid, because when you see a stock rising from the base low in a very short span of time and breaking out to new high ground, you need to avoid those, because a lot of gains have been made quickly and the stock could come under selling pressure. The overall market is also not very conducive to making such purchases from companies in small cap and mid cap space. So that's the reason why we need to avoid. You might see the stock bouncing from its 50-day line, but then that could be a fake rebound as well. So for now, I wouldn't get into this stock. Sure. So Amol has a query on Godrej Consumer. I'll first cover HCL Technology and then I'll come to Godrej Consumer. Similar to Welspun Enterprises, a failed breakout. So after breaking out, stock witnessed selling pressure, huge couple of down days over here, and now it is struggling below its 50-day and 200-day moving average. Looks like a candidate for moving sideways and building a new base pattern. So I wouldn't get into the stock right now. Okay, next is Godrej Consumer. I'm really sorry because I'm mostly talking about stocks in terms of technicals. There is a time constant and I'm not able to look into the fundamentals, but this is one stock which looks really good in terms of both technicals and fundamentals. The stock made a new high today, if I'm not wrong, and it's been a clear uptrend for quite some time now. And the only thing I think the company has been reporting sales growth in single digits. So that is one criteria. So of course, from Canceling perspective, you would want to invest in a company which has double-digit sales growth. But this wouldn't be a bad idea considering the overall market condition, and it could prove out to be a safe bet, because we have seen a lot of consumption-oriented stocks actually doing well, and this certainly has the characteristics of doing well also, because even after facing some little bit of selling pressure also, it is holding up well above its 50-day line and it has not seen a huge selling pressure. So looks decent to me, Amol. Okay, so couple of more, I'll be able to talk about two more stocks. So Reliance Industries is one and DMart is the other. So DMart has breached its 50-day line and it's been quite volatile in last few sessions, which is quite contrary to its nature. So you might see over here, so there was a stake sale news and then the stock actually did pretty well. It recovered, and you need to keep an eye on this stock, especially from 50-day moving average perspective. The main reason for that is the last time it breached, it kind of built a new base pattern. So if it is not able to retake it in coming few sessions, you might, if you're holding this stock, you might want to get out of it. And if it is able to retake it, maybe you can continue holding it. But keep in mind the fact that this stock has seen huge returns in last. So now look at its chart, and the slope is slope itself will tell you that the stock has moved up a lot. And of course, there have been concerns with respect to valuation also, but that is the other factor, and the market seems to have not paid much attention to those reasons, those valuations, high valuations, and the stock has been going up. But when you see a stock breaching its 50-day line and it's not able to retake it, maybe you can consider moving out of it. All right, next I have is Reliance Industries. So I've been looking at this stock, and there have been 3 down sessions, and volume, of course, on one day was above average, but even today's volume was above average. But what I am seeing over here is until and unless the stock breaches its 50-day line, and enters the stop loss range. So the pink zone over here, that's the stop loss range. So that will denote a failed breakout if it enters there. Till then, you might continue holding it. Looks decent by the fact that it has given a clear breakout after a long time. Next we have is Marico. Yeah, so Marico also had a similar situation where the stock broke out after a long period. So almost a 6-month consolidation when the stock where the stock did nothing, and with all consumption related stocks, FMCG companies doing well. Marico was one which also gave a good breakout and the volumes were high. Now you might see that the stock has kind of bounced back from its loss range, so that is a positive. Today's session was good, volumes were good today. So if you're holding the stock, you might continue holding it till there is a lot of weakness and it even reaches its 50-day line and enters the stop loss range. So for now, for me, I think it's a hold for me. Group rank is good, it's great, and buyer demand is also great. So continue holding it if you have it in your portfolio. All right. So once again, thanks a lot for your time and appreciate you guys joined in today. And we look forward to interacting with you all in our next webinar. I hope you found the presentation useful and it was worth your time.